Guaranteed passive income habang nasa abroad? Imagine going to the Philippines and not needing to convert your pounds or dollars because you already have money waiting for you. Or you're looking for a retirement na sigurado. Pag-IBIG MP2 can be your smartest move. My name is Ador. I'm an OFW, a certified public accountant, and I live in London. In this video, let's turn procrastination into action. We'll break down real numbers, so if you stick till the end, you'll know exactly what strategy works depends on your situation, which method gives you the highest return, and how to double your money the fastest. Let's begin. Pagibig MP2 is one of the safest investments in the Philippines. Government guarantees your principal, so you don't have to worry about losing your money. It also pays higher returns than regular savings, around 6 to 7.5% per year. And the best part, you don't have to pay taxes from your earnings. It's perfect for OFWs, young professionals, retirees, and everyone who wants to grow their money safely. But to truly maximize your returns, you need to choose the right investment strategy. The strategy you choose can make a big difference in how fast you reach your goal. You can grow your money slowly, little by little each month, or you can go all in and let time and interest do the magic. So how do you invest in Pag-IBIG MP2 and maximize the possible return? Say, you've been saving months or years and accumulated a bigger savings of 300,000 pesos. You can deposit the full 300,000 as a one-time big lump sum in Pag-IBIG MP2. Remember, it's a safe investment, so don't panic. Put all the 300,000 pesos all in and don't touch it for 5 years. When you open your MP2 account, choose compounding option, which means your interests are reinvested every year. So assuming 7% average interest rate, here's what happens over 5 years. Your money grows with compounding interest. In year 1, dividend earned is 21,600. That's just the first year. But after 5 years, your investment has earned 125,300 pesos without lifting a finger. That's also 40% growth from your initial investments of 300,000 pesos. You see, one-time lump sum is the smartest strategy. It has the highest earned potential. Since the full amount is invested on day 1, it enjoys the full power of compounding interest from the very beginning. The drawback is that you need larger savings to do one-time lump sum investment, and obviously, your entire saving is locked in for 5 years and you cannot touch it. Now, let's take it further. Say you want to double your money. Your investment was 300,000 pesos. If you add the interest after 5 years, you have 425,300. If you just reinvest that 425,300 by opening a new account and without additional capital, after another 5-year term, that becomes 603,000. And you just doubled your money while sleeping. That's 100% growth in just additional 5 years, again, without doing anything. That's how compounding interest work wonders. So if you can, lump sum investing is the way to go. Now, let's say you don't have 300,000 or lump sum investing is too heavy for you. You can still do the same strategy with yearly investing. You can split it by, say, 60,000 a year over 5 years. So yearly investing is more flexible. So 60,000 invested at the start of each year for 5 years is 300,000, which is the same as one-time lump sum. So here's what happened after 5 years. 60,000 will earn on year 1, then your next 60,000 will start earning on year 2, and so on. So in year 1, you have earned 4,300 pesos, and after 5 years, your total interest earned is 71,600. That means you have a total of 371,600. That's 24% growth from your initial investment. Yearly investing is more manageable. Although you are putting lesser amount compared to one-time lump sum, it benefits early compounding each year. Just slightly lower because your money has less time to grow in the fund compared to lump sum. But what if you don't have a big amount yet? No problem. You can start small with, say, 5,000 a month. Over 5 years, that's also 300,000 pesos in total. This is still a game changer, but since your contribution happened monthly, each deposit has less time to grow. But at the end of 5 years, you will earn 60,000 pesos. The total investment at the end of 5 years is 360,000. That's 20% growth from your initial investment. But if you compare that with yearly investing, that's not a big difference. And this is great if you're just learning and starting to invest. The important is you've just turned procrastination into action. And you can now visualize that even with starting small amount, your money can grow and you now have a clear financial goal. Here's a visual comparison to help you understand the difference. Lump sum in blue line has highest growth because time is on your side. Yearly in orange is steady but slower. And monthly in green is still great and slightly lower just because most of the capital has a little bit less time to grow. Now, going back to speed, which strategy doubles your money the fastest? The obvious answer is the lump sum strategy. Your 300,000 pesos becomes 420,000 in 5 years, and at this pace, it doubles to over 600,000 in about 10.2 years. With yearly, it will take about 14 years to double your investment, and monthly slower due to gradual investing, closer to 15 years to double. But let's be clear, all three methods are great and each has its own benefits. If you already have a big amount, lump sum is the best strategy. If not, monthly investing still gets you there. I don't think there is a wrong strategy. The best strategy is one that fits your situation. We all want our money to grow, and that's a common goal. The biggest mistake in investing is not investing at all or waiting for the perfect time or the perfect investment. Honestly, the perfect time is now. The perfect investment is 500 pesos. That's how much you need to open an MP2 account. Now, how can Pag-IBIG MP2 gives you a guaranteed passive income, and how much do you need to invest to live on just dividends? Let's say you want a passive income of 50,000 per month. That's 600,000 per year. Using a 7% dividend rate, 600,000 divided by 7% equals 8.6 million. And yes, you need 8.6 million invested in MP2 to become a full-time dividend retiree. Bear in mind, you don't need to put all your money in Pag-IBIG MP2. I made a video on other passive income ideas that you can earn dividends too. I will include it in the link below. Remember, being an OFW is temporary, but every peso invested now means buying your financial independence tomorrow. Imagine waking up one day and say, "Ako naman, this is my day. I will take a break or a week off. I don't need to take that extra shift." You deserve a better future. You deserve to be a dividend retiree. Comment below on how you're investing in MP2. Is it monthly, yearly, or one-time lump sum? Let me know in the comments. And don't forget to check out the other videos in the channel on the other ways to earn passive income. Click here or here and subscribe for more financial tips and so that you won't miss brand new videos coming up.